Well, first of all, Camden is part of my name, CAM, and part of my co-founder's name, Odin, DEN. So that's Camden, right? A lot of people think it's Camden, New Jersey, but it's actually a combination of both our names. But Camden Property Trust is a multifamily REIT. We have around 60,000 apartment homes that we operate in 15 major markets across the U.S. We're an S&P 500 company with a total market cap of about $17 billion, depending on the day. We have operated as a public company since 1993. About 75% of our portfolio of properties are located in the Sunbelt, with the remainder in Washington, D.C., Southern California, and Denver. We operate a diverse geographic and price point focused portfolio with 60% of our properties and 40% evenly, or 60-40 split between suburban and urban areas, with a 64 and 36% Class B and Class A price points. The idea there is just to make sure that we lower the volatility of our cash flow and provide a lot of opportunity for different price points for our customers. Our strategy is we focus on high growth markets measured by primarily employment, population and migration growth, which drive household formation and ultimately household demand or renter demand. We operate, as I said, a diverse portfolio of assets in those markets. We maintain a strong balance sheet with low leverage. We're one of five, I think, REITs that have an A rating from S&P and Moody's. We deliver consistent earnings and dividend growth to our shareholders. One of our big things too is we recycle capital and create value through acquisitions, dispositions, development, redevelopment, repositioning, repurposing programs within our portfolio. And ultimately, our bottom line is that we are really good operators, and we focus our operations and continue to innovate with new technology initiatives. AI is going to be a big help to us in the future. We're using it now, but it's definitely going to be a game changer, I think, in the next 3 or 4 years by helping us lower operating costs. Well, if we go way back, some almost 33 years, we became a REIT. We were the fourth apartment public company to go public in July of 1993. And early days, it was really interesting because we became a REIT because we wanted access to capital. And at the time, it was a very tough real estate market, and the securitization of real estate was just in its infancy. And Europe had a lot of property companies, but the U.S. did not. And so we were part of that early wave of IPOs that happened in 93, went through 93 through about 95. But the reason we went public was just to be able to access capital so that we could grow our business over a long period of time and create opportunities for investors to invest with us. Well, the bull thesis for Camden is that people always need a place to live. You can't disintermediate us with the internet. People need a place to live. What's going on in the market right now is we're coming off a 50-year high in supply, and that's going to create a situation where construction starts are down 50-60% in the last year or so. So we're going to be in a position where the market is going to need more apartments, but they're not going to be there. So we're going to have the wind at our back from a rental rate perspective over the next 2 or 3 years as a result of the lack of supply in the marketplace. The other big part of the bull case is that the economy seems to be, even with the rockiness in the current environment with tariffs and what have you, I believe fundamentally the economy will continue to do fine over the next couple of years, and that's another wind in our sails from an operating perspective. Well, the bear thesis with all the volatility today in the 10-year and the volatility in the market today is people are sitting on their hands perhaps, and perhaps the economy slows or goes into a recession, and it takes another year or so for us to work through the excess supply that we have, and that would delay the recovery of rents from the 50-year high, probably by at least a year or 18 months, and that would be the bear case. Well, I think the reason people invest in Camden or should invest in Camden is we're positioned for excellence with the right product in the right markets. We have a geographically diverse portfolio with assets that are both urban and suburban, offering a wide variety of price points and living options for our residents. And our markets lead the nation in job growth, population growth, in migration, and overall demand for apartment homes. New supply has peaked, and we're going to have less supply pressure over the next couple of years, and that should improve net operating income growth and revenue growth in 2026 and beyond. We have one of the strongest balance sheets in REIT land with the lowest leverage. So that allows us to capitalize on future growth opportunities, including acquisitions, development, and continue to refresh our portfolio. As a result of the interest rate environment over the last couple of years, there's going to be a tremendous amount of transaction environment where people have to sell, and we're going to be the people that are buying those assets. And I think that gives us a tremendous opportunity to create value both on the operations side, but also on the external growth side. And then finally, our corporate culture is bar none one of the best in the industries. We just recently got our ranking on the Fortune 100 Best Companies to Work For list, ranked at number 18. This is our 18th straight year of being on that list. And when you have a team that is so focused on creating value for its shareholders and creating opportunity for each of the folks at Camden, that's how you have a winning team. That's why we outperform our competitors in great markets and in bad markets.